And as usually with the weekly chart, to have a look at the currency's dynamics. There were two main bullish drivers of the single currency during the past week. The first driver was that political concerns in Europe have declined a bit. The centrist candidate Emmanuel Macron performed well during the first French presidential debates last week, and he's now ahead of his main counterpart Marine Le Pen from the far-right National Front in most opinion polls. And as Macron is the pro-European candidate, this is surely good for the euro, and the currency is starting to appreciate and price in a better outcome of French elections. So earlier traders saw great risks. They thought that French presidential election may turn out to be another event like Brexit or the US presidential election, which brought unpredictable results. But now things are starting to calm down, and a more conservative, a more establishment approach is winning. So we can see that euro longs are increasing and short positions are decreasing. Also, the euro area released surprisingly strong manufacturing and services PMIs. Business activity across the region is rising at the fastest pace in almost 6 years. The European Central Bank is still doing its quantitative easing, though the monthly amount will decline starting from April. Good data will intensify the calls for the ECB to tighten its monetary policy. And in the coming days, we'll be paying attention to German CPI on Thursday and the euro area CPI on Friday. Higher figures will be another bullish factor for the euro. Looking at the weekly chart, we can see that our first target at 109.10 has almost been hit by the pair, and that there is some possibility for the single currency to strengthen more, to test the 50-day moving average at 109.50. Personally, I think that the best moving averages to watch are 200-day moving average, which is painted in orange here, the 50-period moving average painted in brown here, and also the 100-day moving average, 100-week moving average in this case. We usually paint it in green. Is also a good tool. These are the moving averages which are mostly watched by traders and investors. So I think that they are important. And this line is just above the key psychological level of 1.10. So earlier in my previous reports, I pointed out that as long as we stay below 108 mark, 108.30, this was January high, the euro may reverse to the downside. However, now I feel that the fundamental picture is improving. We have strength from the euro area, we have weakness on the part of the US dollar, and I think that these levels at 109.50 and even 1.10 in case of some negative surprises from the US are attainable. Well, I don't think that we need to target higher levels than 1.10. It will be running ahead of the events, but further upside is still possible for the euro. If we look at the daily chart, we will see that the former resistance, which was located at 108.30 and 108, is now acting as support, as well as 107.70 area. So here we may draw several support lines. We may take Fibonacci from these recent ones. Still, support levels I think are clear, and if we want to take deeper supports, it will be in the area of 107. For now, we can see that on the daily chart, on Monday, the single currency failed to close above 200-day moving average, which is currently located at 108.79. This is a sign that above this line in the area of 109, there are some short positions on euro. I think that some orders are clustered here around 109. So for bullish bets on the euro, we need to confirmation that this line, 200-day moving average, is actually broken to the upside. In the near term, the euro looks a bit overbought, so we'll be looking for a test of support of 108.30 and 108 in the coming sessions. Also, I usually use this weekly pivot indicator. Every week we have to renew these levels the indicator gives us, and it is a good way to judge where the market is situated at the moment. You can see that the light blue line is located at 107.80. This is the weekly pivot point, and as long as euro dollar is trading above this line, the picture is more favorable, is more bullish, and we can see that the pair is already above the first resistance line, tested the second resistance line, and the third resistance line is located just at 109.47. So the levels we have found on the weekly chart correspond with the weekly pivot levels, and 109.47, 109.50 is a good way where it is possible to take profit on the euro-dollar long positions. I point out at the fact, however, that we have this gap which isn't closed yet, and attempt to close it may bring euro-dollar down to support at 107.80. We'll get some comments from FOMC members in the coming days and today as well. So these comments from the US Central Bank may act as the short-term driver for the currency pair. And if these comments are hawkish, that may provoke some strengthening of the US currency. And the trigger for the euro dollar to close this gap, get into lower levels. Still, as I point out, the break of the euro dollar above February and January highs is a good sign, and it's a sign that the euro is capable of getting higher. If we look at the 4-hour chart, we can see that here still bullish trend exists. This may be seen by the relative places of the moving averages.